Welcome back, and joining me for a closer look at the day's trading session is Viv Govender from Swiss Offshore. Thank you so much for your time, Viv. Quite interesting that after yesterday's bloodbath on the JSE and on the currency, we've actually seen no movements. The Rand still at 17 Rand 40 and the JSE trading relatively flat, an extension of the pressure on the resources. Our market's just in a state of limbo at this point.
Sorry, is it me? Sorry,
yeah.
Sorry, I didn't see that. Yes, look, I mean, we have a very weird market at the moment. We have the resources sector pulling back quite strongly with a gold price that's fallen, almost 10% in the last little while, last few days. That's really hurting us quite badly. But other sectors like the financials and the industrial sectors are not doing quite as badly. Today it's a tale of two markets, like it's been the other side around as well. Recently, we've seen resources do really well when other sectors have not done quite as well. So it's a bit of a decoupling between the resources and the other sectors of the South African economy.
All right. Well, let's actually, because we know that we are knee deep within U.S. earnings season. Of course, something that's always interesting is the results of Netflix, and seeming that they disappointed markets today. But there's also some corporate action talk there with Netflix and Warner Brothers. Just talk to me about what's disappointed investors there, but also what we could see in terms of corporate action there.
Yeah, look, I mean, Netflix has a business model, that's, I think, in a great deal of difficulty in the current times. If you think about it, Netflix has to make the stuff initially and then sell it to people, and the hope that they will convert that interest into, more subscriptions or long subscriptions and so on. A couple of factors fight against it. So its main competitors are companies like Amazon and Disney. And Amazon and Disney, with Amazon Prime, can get earnings from, their software, also the IP that Netflix just can't. For instance, you do a Frozen with the Amazon, with Disney, sorry, and you can have Frozen dresses. Your daughter can buy Frozen, karaoke machines and Frozen whatevers for years after the thing has been popular. The same thing with Amazon. Amazon doesn't really care what you watch or you don't watch, as long as you eventually basically use Amazon Prime delivery to buy stuff from Amazon, and that's where they make most of their money from.
All right.
Netflix has to basically rely primarily on its own IP. And therefore, the deal with Warner Brothers would add to the IP, gives it access to a company like HBO, for instance, which has things like Games of Thrones and Succession, important businesses. And so it's really doubling on that thing. And this is all in an environment when we have the emergence of, Sora 2 and VO and so on from Gemini, which is really going to change what the entertainment atmosphere looks like in the next, I would think, couple of years.
All right. Well, Viv, as we're on this trail of consumer-facing stocks, let's bring it back to the JSE. And there we did see numbers coming out from famous brands, their half-year numbers. They saw mid to high single-digit growth from the top line to the bottom line. The company highlighting that its strategy remains appropriate and resilient despite the challenging operating environments. I'm just wondering at this point, if a famous brand has landed on solid footing after being an underperformer for a while.
Yeah, look, I mean, it's still recovering in many ways from the last few years. I mean, it was going down anyway when we hit COVID, but we still haven't returned to the pre-COVID highs just yet. Obviously, people are still, getting back on their feet in terms of tourists recovering in terms of going out and so on. It's pretty much back to normal at that point of view. Unfortunately, the other thing that affects them is the fact that the South African economy is really under pressure. And people need to have a disposable income to go out and spend money at famous brands. So that's one thing. That being said, they are pretty optimistic of the future. You can see that because they're out there, expanding their brands. Just topping 3,000 restaurants out at the moment. About a quarter of which I think is current franchise partners. So it is a business that is still trying to expand into new areas and getting new people into the franchise system as well.
Well, actually, talking about disposable income, we did also get the consumer inflation print for September today. That accelerated slightly from 3.3% to 3.4% in September. Is this change of any influence?
Look, it was as expected. It is a 10-month high, so it is not great news. And I think to also keep in mind is that the Reserve Bank was trying to get the inflation target down to 3%. In the current targeting, basically 3 to 6%, which basically 4.5% of the point of 3 to 6 is your effective target. No, a 3.4% inflation rate is not a problem. In fact, it's lower than your target. At a 3% target rate, this is a problem, and you might be looking to not cut interest rates in this environment. You might be looking to even, if it maintains this level, raise interest rates. And that just shows one of the dangers of actually looking at, bringing your inflation target down as much as 3% or down to 3%, from 4.5%. It's a pretty big drop down, and I think it probably would be a step down as opposed to one big jump from 4.5 to 3%.
All right. Let's take a look at Quilter because it came out with its third quarter trading statement today, and pretty good news as it says that for the third quarter in a row, it has produced inflows, net inflows at that point in excess of £2 billion. What exactly does this speak to?
Yeah, look, I mean, you're talking about a thing that's basically over 100 billion. So 2 billion pounds is, a large number, but it's not like a huge, number in relation to the size of the fund. Obviously, they are being affected positively as well, but the fact that markets are looking reasonably strong at the moment, and that's obviously helping them as well. There's a bit of positivity coming through. A really interesting thing there is the affluent section that's really growing a little faster than everything else, which I do think kind of makes sense in the current environment. People with money are seeming to basically get a bit wealthier, and there is a bit of a bifurcation in terms of who actually can invest and how much they can invest and so on. But yeah, it's a nice little inflow. I think they're also being helped, like I said, more by the improving market than anything else, though the positive inflows are positive.
All right. Well, Viv, let us get to your stock pick for today. Where are you finding opportunity?
Okay, it's a company called CATL. It's a Chinese battery manufacturer. The reason I like it is that if you look at what's happening right now with regards to AI, the demand for energy is quite high, and you really can't build nuclear power plants or coal power plants or even gas turbines fast enough. The one thing that can be done is basically solar. And if you think of solar being difficult, it's because of batteries. And the fact of the matter, this company is coming out with some really innovative battery technology at the moment. It's larger than like UID, battery technology in China. And I do think that battery technology is one of those things that we might have issues with China from the US point of view in terms of spyware and so on, but batteries I think are a bit more safe than things like, for instance, phones or TikTok apps, etc.
All right. Well, thank you so much for your time and giving us insight on what has moved investors' money today, Viv. That was Viv Govender from Rand Swiss Offshore.